What's up? Welcome to a new episode of Philosophy Culture. Back here again with my dude Casting. What's up?
What's up? I'm good, miss. How are you, bro?
I'm good as well. So,
Great.
so this episode we will talk about stocks again, and it's the second episode of our investing season, right? And yeah, what is our topic today, Casting?
Okay, so our topic will basically be, yeah, stocks, as you said, and different categories of stocks, right? So we will look into preferred stocks. What are they? Penny stocks, ESG stocks, international versus domestic stocks, and all kind of different categories, so to say. So
Yeah, all that jazz.
exactly.
Check it out.
Check it out. Another one. Here we
Another one.
go.
Huh?
This one is going to be different, a bit different from the last one, right?
Yeah.
Uh, so I won't say how it will be different, but let's say I will ask you the traditional question and you will answer it. And so you will reveal what it's going to be about. Okay?
All right, let's go. Let's do it.
Okay. So why do we choose this? Why did we choose this topic?
So we chose this topic, which is we will discuss just the different type of stocks, right? Um, and yeah, we will. Me and Justin will name the different type of stocks, right? But then we also are gonna present and discuss more deeply three three stock types each, right? You're gonna we have like chosen three types of stocks, which we will go into a bit deeper. And yeah, I think this is gonna be a shorter episode, right? But
Yeah.
yeah, we will still do this to learn more about investing. So yeah, let's go. What about you? Why do you think this topic is important to learn about the different kind of stocks?
I would say that it's a good sort of follow-up episode our of after our first investing episode we did last time
Yeah.
about how everything works and how how the companies are going public and how you buy stocks and what are stocks and so on. So I think it's just a good follow-up episode, and I guess we'll focus more on the stocks themselves rather than how they maybe work. Um, so yeah, that would be my answer.
Right. Yeah, that's perfect.
Okay, good.
Nice.
So shall we
Uh,
start?
yeah. Should we maybe name all the types like
Yeah,
in the beginning, then we can go into some stocks that we chose personally.
yeah. Would you like to just name them briefly and then go on to our favorite stocks or like our type of stocks that we may like? Or shall we also go through the like what they like define them?
Um, I guess we can do some brief definitions as
Okay,
well,
good. Yeah,
since we kind of know what they are about, right? So
yeah,
might as well. So okay, so before this episode, I found like this interesting article that had like different type of stocks listed, and there maybe are even other type of stocks which we don't mention, but whatever. We have a few which we will bring up. So yeah. So first stock that I have listed is common stocks, right?
yeah.
And my definition of common stocks are so. wait, so the common stock allows for the right for investors to vote on important company matters. So I'm not sure if common stocks pay dividends. I'm not sure about that. Do they?
I think they could as well, yeah.
Right. But maybe we can even just go into the stocks, more specifically, since I know that you chose common and preferred stocks, right? Or
Yeah, I chose like a preferred stock.
preferred stocks, right?
Yeah.
Uh, yeah. But like, do you have maybe a better understanding since they like were under the same title in the article? Maybe
Yeah, I would say that the common and preferred stocks, they're sort of similar vote. But the thing is that the common stocks are more, yeah, you have more voting rights. Um, yeah, in different matters within the company. Meanwhile, in preferred stocks, you don't have any voting rights, I believe. But you are more preferred to get a dividend payout. Uh,
right,
so yeah, that's to just, conclude them briefly.
to compare
Uh,
them, right? Yeah,
yeah,
exactly.
to compare them briefly, yeah.
Yeah.
Um, but yeah, like
Oh,
yeah, that would be it. Uh,
right,
sort of, and I think that like common stocks are usually found. I think they are the most common found. Like that's all. Yeah, maybe not all kind of stocks, but you can find them in many companies, I would say.
right. Since like it's basically the the average person like who maybe doesn't know too much about stocks, right? It's kind of
Yeah,
the common understanding that a stock is a piece of a company. So
yeah,
with that, I think many think that the voting rights comes with that, right?
yeah,
So yeah, I think you're probably right, and that's probably the reason why they are called common stocks as well, right?
yeah, yeah. Exactly. I
So
mean, yeah.
yeah. And do you want to say something like maybe about preferred stocks? Since I think maybe we can just dive into the categories that we have chosen when we can just name, all the types, and then we can just skip kind of briefly over certain type of stocks, and then we can dive in more deeply, into the stocks that we personally have uh, bigger interest for.
Okay, sure. Yeah, that sounds good. Yeah. Yeah. But yeah. Um, as you mentioned in the beginning, I guess, we will also go through some of our preferred type of stocks. And one of mine would be the preferred stock. And that is because, as I mentioned previously, it has more, yeah, it gives you priority when it comes to dividend payout. Um, and yeah, that's and a good example of that would be, for example, Volkswagen preferred stock, which I think previous year in 2023, or I think it was. Let me check it real quick. Uh, which in 2022 actually had a payout of 19.06 euros. That's a huge amount. Um, and yeah, during 2023, it paid out like 8.8 euros almost in dividend. So you're more likely to get higher dividends. Not always, but you're more likely to get dividends uh, than with other stock types.
Right.
So yeah, that's to just briefly, you know. talk about it.
Okay,
But yeah. Okay.
cool.
So next one then, right?
Next one.
Okay.
Do you have the same list as me, or
I believe so, because the next one would be large cap, mid cap, and small cap stocks, right?
let's go? Yeah.
Okay, cool. Um, yeah, so basically with the capitalization, it would be like the size of the company is could be determined by market capitalization,
Yeah.
right? Uh,
Which is the uh the amount of all the stocks together, right? If I have understood that right.
yeah, the current share price multiplied by the total number of shares outstanding. Yeah.
Right.
So yeah,
Wait, what like what does that mean?
the current share price, so the price for which a stock is selling, multiplied by the total number of shares outstanding.
Outstanding is the like just
The total number of shares
okay, okay.
outstanding. Yeah. Um, yeah. And so if you have, for example, there are actually 5 categories in this one, according to our estimates. And so you have mega cap stocks, which would be which is a company that has a market capitalization of over $200 billion.
Right.
They have large capitalization stocks, which would be uh, between 10 billion and 200 billion. Then
Yeah.
you have mid cap stocks between 2 billion and 10 billion, small cap stocks between 250 million and 2 billion, and micro cap stocks that would be less than $250 million.
Alrighty.
So yeah, I would say that mega mega cap stocks and large stocks are usually um, or belong to like bigger and well-known companies, right?
Yeah.
For example, yeah, we also have some examples like Apple, Microsoft, Coca-Cola,
Yeah.
uh, right? Uh, so yeah,
Exactly.
yeah. So
So yeah.
yeah, exactly. Would you like to go further?
Let's end with the caps. Uh,
Yeah,
all right. So yeah, sure. So the next one on the list are domestic and international stocks, which is actually one of the types that I chose, and a type that seemed interesting to me. But that's like basically it's an interesting categorization because everything depends on where you live, basically. So if you live in the States, right, Apple stock or Coca-Cola, like they will count as a domestic stock um, for the American citizen, right?
exactly.
But if you are a foreigner that lives or foreigner, but like if you are a person that lives in Europe, for example, those stocks will count as international. And I read somewhere, or yeah, actually I have it here. So, for example, I think this little paragraph is like from the perspective as a American citizen. So if you will live in the States. So it's said here that, for example, you can buy stocks from Apple at the local American market. So yeah, stock market, right? But to get stocks from the Japanese Sapporo, I guess you pronounce that, you will need to go to the international Japanese market. But I have a question for you though, Constant. Maybe you know this. Uh, since we last episode talked about how, each country has their own kind of official stock exchange, right? Is it the same one? Like, is that one, let's just say Japan for to kind of, relate to this example that I just mentioned. Would their official stock exchange stock stock exchange, would
Hmm.
that be the same where you would buy there's like Japanese stocks as a foreigner? Do you know what I mean?
Yeah, I think I know what you mean, and I think so, right?
Yeah.
Because I haven't heard that the company would, for example, divide its shares. So, for example, that yeah, okay, so we will keep this is a very basic example, but we will keep 70 shares just selling domestically, and then we will sell 30 shares internationally. And
Right.
for that, we will put them aside in a different sort of part of the stock exchange or whatever you want to.
Right, right,
So
right,
I think everything should be exchanged on the same market uh, for respective country. Uh,
right,
um, and yeah, and I think that's where the what do you call them, trading platforms comes in, right? So that's where they can buy different rights. I have no idea how that actually works. Um, about like how they are able to buy from different, how you can buy through them through different markets, even though they may be based in another country.
right.
Do you get my idea? Idea. Um, I think that's more sort of. I think it comes down to some legal stuff, uh, which
Different
I'm
contracts.
yeah, all kind of contracts, yeah, agreements, and yeah, so on. So I'm not really sure about how that works, but yeah,
Exactly, exactly. Let's see if I have forgotten to mention anything about domestic and international stocks. Let me just briefly. All right, interesting. So international stocks can be further divided into those from developed nations such as Europe, Japan, Australia, and those from emerging market nations such as China, Brazil, and Thailand. So I wonder how they are divided.
yeah.
Because like right now, from our understanding, like everything should be like kind of centralized in a way, right? Like I don't think, or I have no idea. Like yeah, uh, but I don't think finding like Chinese or Brazil stock would be or should be much harder than finding the stocks of more developed nations.
I mean, the thing is with the more developed nations is that you have stricter rules, you have more, yeah, everything is more legally done, so to say. I don't say that it's completely like 100% bulletproof, but it's more like you have more, let's say, controls for the different companies, and everything is more, yeah, as mentioned, more
More
under
regulation.
watch. Yeah, regulated.
Regulation.
Yeah, that's a good word.
Mhm.
Meanwhile, if you, for example, buy some stocks in a company in, let's say, Venezuela, where they have had like huge problems with the inflation, and where the and it, which is, I don't know how politically stable it is, but yeah, a few years ago I heard that there were some issues regarding their
Yeah.
economy and so on. That would be, yeah, that would be a more risky choice, so to say.
Right, right, right.
So I think when it comes to um, Yeah, so when you look at like developed nations compared to undeveloped nations, or like what was the other word?
Huh?
Developed nation compared to,
Compared to emerging market nations.
yeah, sorry, yeah, it wasn't, yeah, yeah. Then I guess you're looking at the economic stability and political situation and so on.
Right, right, right. Yeah. Right. Yeah. Yeah. Well, yeah. It's actually written here like domestic, like U.S. stocks are owned by both U.S. and foreign investors and are typically seen as high quality. And that kind of uh, strengthens your point that the stocks from more developed nations, yeah, are probably seen as higher quality and therefore also more visible, I guess.
Yeah, but yeah, I mean,
Maybe.
sure, yeah, and yeah, probably more visible as the companies that are actually doing very well are usually from the more
Yeah.
developed nations, right?
Yeah.
But on
Exactly.
the other hand, I think there are like some great opportunities in the more uh, emerging, yeah, as we call them, emerging stock markets.
Yeah.
So from the,
Emerging market nations. It's written in the
yeah, I'm mixing up those words. Crazy. Uh, but yeah, I think there are some opportunities there as well. Um,
for sure.
so yeah, there's no, depends on what you seek, right? So if you look for stability, maybe it's better to look at some more stable stocks in a from a more developed country compared to, but even them can sort of fluctuate. So
Exactly. It's interesting. Yeah, but I guess it's like more safe to invest in those kind of stocks, right? If you are investing with a more long-term horizon or like more like long-term mindset, right? So yeah, yeah, that's what's up. Do you have anything more?
oh, I was just about to ask you, like, which markets were you referring to when looking at the more long-term perspective? Were you looking at the more developed sort of nations or looking at the more
Like if
recent?
I don't know if I'm or afraid. Uh, I guess I'm uncomfortable in like investing overall since I like don't have the biggest experience with that. But uh, I would for sure me feel more comfortable investing in the companies that are registered and come from the Western nations, like or like the more uh, more developed countries. Uh,
Yeah,
just yeah, if I have the more long term if I have a long-term plan in mind. So
yeah, I see. Yeah, because some
because
people,
yeah,
yes, some people invest in more riskier stocks if they are looking for long term. But again, it comes down to your own sort of strategy, right?
I guess so. I don't really see why it would be smart to invest in something very volatile. Like let's say I pick a company from Thailand to invest long term. I don't know. I don't know. Yeah, I don't know anything about investing, so there's my they're like maybe is some kind of logic behind it, but uh, as as of now, I kind of see these stocks from the developing countries, or what was the name? The
Developed
I don't know.
nations.
Yeah, I think our listeners know what we mean. But yeah, from the developing countries. Wait, what was I gonna say? Yeah, as like so I see the stocks from those kind of countries as altcoins, like crypto.
Okay.
like in a way, as of now, I'm keeping my mind open, but like it seems like they are more vulnerable to fluctuate, like crazy.
Yeah, yeah,
And
yeah,
that's kind of my understanding of crypto and altcoins as well. Like they can shoot up in value, drop in value, depending on how much value people put into the altcoin. I know it's not the same thing as a company, as a official company that provides a service or a product, but that's kind of how I see it with the volatility.
yeah, yeah. I understand.
But like, do you have like a maybe you can provide me with some logic, some
I
yeah,
mean, as you said, as you said, you didn't compare the cryptocurrency and altcoins with the stocks from a more emerging market because that would be sort of unfair-ish.
yeah, yeah,
And
yeah.
that's what you also said, that it's not the same thing. Um, and I think that in some cases it would be risky to actually invest in those type of companies from emerging markets. But I think that if you, for example, invest uh, in a small company from an emerging market that provides a service or a product that may be very demanding, very, very in demand in like, I don't know, 50 years, then
Yeah,
you may like that risk could give you a huge reward,
for
right?
sure.
So I think, yeah, I think you should do everyone should do their homeworks before investing, right?
Yeah, yeah, yeah,
Uh,
yeah.
but yeah, the risks are different depending on the country and depending on the stocks.
Exactly, and that's kind of what I forgot to mention. Or yeah, you kind of reminded me to think about that as well. Uh, that there's a more nuance to it, like what service or product the company provides, and also I think it also depends which industry
Yeah,
it is also a part of. Because let's say a country like Venezuela would like now find that they have so like huge like a lot amount. How do you say this? Uh,
I-
large quantities. Can you say that? Can you say that? I think so. Like
yeah,
of some natural resource. Then of
yeah,
course it could be I think with my investing brain that it could be a okay investment with a long term.
yeah, yeah, exactly. It depends on a lot of factors. Um, and so by looking just at the country itself, it's kind of it's very it's very narrow. It's a very narrow perspective, I would say, to to just look at a country before choosing which stocks to invest in. Uh, right. So yeah, there are multiple factors which could affect the evolution of a stock and its the price and the company and so on.
Actually,
Micro, macro factors, yeah. So
exactly, yeah. Because I think when we were looking at the biggest companies in Europe,
yeah,
like there were many that were based in Ireland, right? And you said that it's because of the tax breaks they can get there.
yeah,
So
they have
uh,
some tax benefits, I guess.
exactly, they have like found some legal loopholes, I guess. And some companies there are founded from the beginning in the States.
And
Uh,
that's the same. That's the same with Cyprus and Malta, I think. There are
right.
some companies moving their headquarters there because it's more. more beneficial from a
Right.
tax perspective and from different benefit.
Exactly. Exactly. So yeah. Uh, yeah. 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 Nice. 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 Now we have talked about that, and we can go to the next one, right? We can jump into different type of stocks again, and the next type of stock or stocks are growth and value stocks, right?
Yeah, exactly.
Yeah, which is again a category which I personally chose, so I guess I will do the explaining
Please, sir.
as as good as I can because I'm all new to this stuff. So yeah, don't judge me. Yeah,
But I mean, that's why we are doing this for, right?
yeah,
Just
yeah. No, I'm
just
just kidding.
learn
I'm
and
just
do some
kidding.
research. Yeah.
Yeah, for sure. So let's start with the growth stocks. So a growth stock is anticipated to grow at a rate significantly above the average growth of the market. And I think I saw some, or maybe I even have the paragraph here in my notes. But like it was like this interesting paragraph that said that the growth stocks. Oh yeah, I think I have it here. So growth stocks refer to shares of companies that are expected to grow at rates significantly above the average for the stock market as a whole. Over the next 5 years, analysts predict an average EPS growth. I don't know what that stands for. Do you know?
Earning per share, I think.
Baboom. Earning earning per share growth rate of 8.8% per year of the S&P 500 stocks. The best growth stocks are outpacing this benchmark by multiple or 2 to 3 times or more. So yeah, so their wait, EPS stood for what?
Earning per share.
Penny per share. So the average earning per share growth rate, right?
I
So
would
the,
conclude it as yeah.
yeah.
I would conclude it as like a growth stock belongs to a company that is not paying out any dividends because it seeks to just grow above the average.
Yeah, that's actually a good one. I think I'm overcomplicating the things, but that's
No, but
exactly right. That's exactly right.
yeah, but
Uh,
you included more details, so I think that was good. But that's how I would just explain it in few words. That was the thing.
Yo, no, no, that's actually perfect. That's actually perfect, and I think we can just move on from there in a way, uh, because like I have some other details. Do you want to get into them?
Sure, why not?
So growth stocks are those companies expected to grow sales and earnings at a faster rate than the market average, which we have said. And then I have like a few like key points or like some key takeaways. So growth stocks often look expensive, trading at high PE ratio. What was that again? I looked it up with like
Price per earning.
exactly. And what does that really mean?
That's like
It was like for each dollar you invest, it kind of is a ratio like for each dollar you invest, it kind of translates that to how much you will get back per each dollar, right?
I think so. I think my mind was a bit off for a while, but yeah,
Yeah.
yeah, I would say that we had a talk about this when it came to the Warren Buffett episode on Berkshire Hathaway and their strategy, and those companies that have a higher PE score are usually overvaluated.
Wait, so wait, the companies that have
High PE score
high, okay,
are usually overvaluated. So they trade for more than they are actually worth.
exactly, yeah.
Uh, and I think the average or like a good PE ratio would be for
Oh no, everybody froze.
average. That would be
You
like,
froze, bro.
yeah, 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 you too.
Yeah,
Um,
everything froze.
but yeah, so that's
The
what was I
mannequin
going?
challenge. No, but what did you say again? So a good PE ratio is what?
Yeah, a good PE ratio would be approximately 13 or 14.
Right. And a bad one, do you know?
Bad, it depends, but I mean, if you have a PE ratio of let's say 60, maybe that would be a bit like overvalued.
Yeah.
While if you have a negative P ratio, it's more like it could be undervalued, but I mean, if you have a very high, very negative P ratio, I think then the company is kind of actually going downwards, like literally.
Interesting. Okay.
Um, so yeah,
Okay, 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 okay. Nice. So, okay, another key takeaway. Since
yeah,
investors are paying a high price, oh shit, sorry. Since investors are paying a high price for a growth stock based on expectations, if those expectations aren't realized, growth stocks can see dramatic declines. And what does that depend on?
wait, could you repeat that again? Sorry.
Yeah, since investors are paying a high price for a growth stock
Yeah,
based on expectations. If those expectations aren't realized, growth stocks can see dramatic declines.
yeah. So that's basically if yeah. So when you're investing your money, you're expecting the company to grow, right?
Yeah,
And especially when it comes to growth stock, you're like, yeah, okay, take my money. I know I might pay a bit more than what you actually are worth, but I will see some good results out of it, right?
right,
And so if I pay you more than you're actually worth and I don't see any results, then I will just start selling because I don't see why I
right.
would do it. There's no like,
Okay, that makes sense. Yeah, yeah,
yeah,
okay.
that's how I would um, interpret it.
Right, right, right. Yeah. No, it makes sense, makes sense. And I think as we mentioned, growth stocks typically don't pay dividends since they reinvest all the capital they get from the shares into their business, right? To keep on growing and I guess scale their operations.
I think a very good example of this would be Berkshire Hathaway, right? They don't pay any dividends, and they have never done it. I think they did it once, if I remember correctly. Did I
Yeah.
not?
And I think Warren Buffett wasn't too happy about that.
No, it's not.
Yeah.
Um, but yeah, they keep all of the profits they make, they just reinvest it, buy new uh, companies, um, and just make sure that they grow.
Yeah, yeah, yeah.
So
Interesting. Interesting.
yeah,
Yeah. I'm really happy we dove. I think you said dove into like the Berkshire Hathaway team, let's say, like
yeah.
with the Warren Buffett and Charlie Munger. That was really really cool to learn about actually.
And I think it was perfect timing as we did the episode just before starting our investing quarter.
Exactly,
Um,
exactly.
so I think it was good. That was good.
It was really good.
Yeah.
Okay, so growth stocks are often put in contrast with value stocks. I actually have some examples of the 10 best growth stocks of January 2024.
Go ahead.
And I can just name one just so we can move on. And one of those are Planet Fitness, and their 5-year average. Uh, fuck, I forgot. EPS or earn
Earnings
per
earnings per share.
earnings
Yeah.
per share. There we go. So their 5-year average earnings per share forecast is 197%.
For how many years?
5-year average.
Okay. That's okay.
So I don't know what that really means. It's looks like a lot.
Wait, can you repeat the entire sentence you just read?
Yeah. uh, yeah, Planet Fitness, like their 5-year average earnings per share forecast
Yeah.
is 197.7%.
Yeah. So they expect to have a earning per share of 197%. That would be
Yeah.
the average on a 5-year period.
Is it under a 5-year period as a whole, or is it each year for 5 years?
Oh, no, no, no. That would be the average for the entire 5 years.
Right.
Because if it would be for 1 year, that would be crazy.
Right. Okay. Just to make sure, like, yeah,
Yeah. That's how I
um,
understood it, at least.
yeah, I trust you. I think you're
Yeah.
right because that makes sense. It kind of sounds like a lot. Okay, so and we can just quickly go through value stocks and then we can move on to the next category.
Yeah.
So a value stock is trading at the levels that are perceived to be below its fundamentals, it's said. So I'm guessing it's like the basic metrics, right? Which you value a stock by. So it's like the P/E ratio, and I guess even the EPS metric score. I don't know what you call it. But yeah, so some common characteristics of value stocks include high dividend yield, low PB ratio. What's that?
PB.
Yeah.
I have no idea about that one, actually.
Hey,
Price to book ratio.
huh?
Price to book ratio.
Okay, what does that mean?
A company's price to book ratio is the company's current stock price per share divided by its book value per share,
Yeah.
according to Investopedia.
All right. Yeah. So a low PB ratio and a low PE ratio.
Yeah.
So those are the common characteristics of value stocks. They pay high dividend yield, low PB ratio, and a low PE ratio. Um,
That's because they are usually low PE ratio means that they are sort of undervalued, right?
yeah,
Yeah. Yeah.
exactly. So a value stock is different from a growth stock, which is a riskier equity with potential greater upside. So again, it kind of means that it is undervalued, no?
Yeah. Yeah, I would see. Okay, so let's put the threshold. Let's put the limit at like 14, like a PE ratio of 14.
Right.
I would say that a growth stock would be around, I'm not sure about it. Well, let's to make it basic, let's say 25.
Right.
They're even higher, I think. 25 is still, I guess, quite decent. But let's put it, okay, let's exaggerate. Let's put it like 60.
Yeah.
That would be like a very high P ratio. And value stocks would go for, let's say, a P ratio of one or two, or -2 or one, and so on.
Hmm. Right. 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 Okay. 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 And then, yeah, value stocks often issue dividends as the company has less need for capital for growth. Meanwhile, growth stocks tend to rely on cash for development. So, value stocks are often issue dividends as the company has less need for capital for growth. So I'm guessing it's like pretty established, right? Or how would you interpret?
Come again?
Okay. Value stocks often issue dividends as the company has less need for capital for growth.
Yeah, so I would say that would be a more of a company that has reached their sort of growth goal,
Right,
and are just sort of have reached a sort of plateau, right?
right,
And maybe doesn't want to invest as much in growing anymore.
right. Right.
Uh, so yeah,
Yeah. Okay, so that's kind of the category for the stocks of those sort of companies, right? That are kind of they aren't that focused on the growth. They
yeah,
just kind of want to do their thing. uh, and the growth isn't their main objective. So
yeah. I just found some other interesting information where it
yeah,
says that a P ratio above zero means that a company is still profitable, and I interpret it as if it's below zero, then it's not profitable anymore, and it's um,
bankrupt.
sorry, sorry.
Bankrupt.
No, I'm not going bankrupt. I mean, there are, I mean, not
Well,
going,
okay,
but
yeah.
are just they are losing. They are they are losing.
That was just a stupid comment, but yeah,
No, no, no,
I just
no,
realized that like
no, 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 no. But they are losing money at least. Um,
yeah.
and so a P ratio below 15 is considered low, even though that I have heard that a good P ratio would be 14,
Mm-hmm.
13, 14-ish.
Right.
Um, Meanwhile, ratio above 50 are considered high. You
Mm-hmm.
so that would be, yeah. If we put it on a scale, that would be the sort of key key levels, or like, yeah, key points.
Okay. 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 All right. So there we have the growth stock and the value stock, right?
Yeah.
All right. Let's go to the next one. Sector stocks. Which do you want to take that one? I feel like I have talking like I've been talking too much now.
Yeah, I mean, there is not much to say about sector stocks, to be honest, because that's just the stocks can be divided into different categories, and one of them being by sector.
Yeah,
So
which means different industries, right?
yeah, so if you, for example, buy uh, a stock in a company that is, administering different real estates, then you would go into a stock in the real estate market.
Right.
in the real estate sector, sorry, or market. Yeah.
Yeah.
If you buy stocks in a bank, that would be financials. So that's yeah, it makes sense. And
Yeah, or like gold, I guess that's materials, or
I I don't think you can buy stocks in gold. I
no,
think
no, like gold isn't a company, but like you can invest in gold. Like
yeah, but that would be raw material.
I don't know, it said materials here in my notes, so I don't know. I think it was written that way in the article as well. But I was like debating in my head if it is materials or if the right word is maybe commodities.
Yeah.
But yeah, whatever,
I
whatever.
mean, if you're investing in a company that extracts, let's say, oil, gold, or different metals, I think I'm wondering on what.
No, but I think you can invest in. I think I've heard that you can invest in a. Uh, I don't think it's a fund, but I think the word index can just stand for the value of a certain thing, you know?
Yeah, I think you can invest in different. I think it's called an index that are following the gold standards.
Yeah. So that is kind of what I meant, but yeah, that isn't really related to stock. It's like more so value value investing. I don't know. Yeah.
Yeah,
Whatever. We will do an episode on other things related to investing as well. So we will probably get more into gold and stuff as well.
yeah. But basically speaking, the sector stocks are. I mean, if you want to look for the sector, okay, my mind is completely
No, no,
messed.
like don't overcomplicate it. Like I think we said it pretty good, or you said it pretty good in the beginning. It's just within stocks within different industries. Boom.
Yeah, exactly.
And you have some good examples. Like if it's related to like financials, it is within the financial
Yeah,
industry, right?
yeah,
And if it's a real estate company, then it's within real estate
yeah,
sector or
yeah. Exactly. Yeah.
all right. So next one.
Next one would be dividend and income stocks, right? Those are kind of yeah. Those are companies that pay dividends regularly uh, to their investors. Could be yeah. Different examples would be Apple, um, Bank of America. I think Bank of America pays out every quarter, if I'm not mistaken. Then we have all kind of uh, companies actually. So that's a very basic definition, right? So dividend and income stocks. The name speaks for itself.
Right, and like a dividend and the income stocks is basically the same thing.
Yeah,
The names are pretty inter interchangeable.
yeah,
I think I think the word was something like that. But yeah.
yeah. And that can easily be like that can easily be checked up in on Google or if you have a certain platform. So
Right.
yeah.
You mean like if the stocks pay dividend?
If the stocks pay dividend. And we had one good. We looked at a video about the stock called I think it's Realty. I don't know. I'm not doing any advertisement for this company. Uh
Well, I have no idea what you're talking about, so
Realty Realty Income Corporation, they pay out every month. They pay out dividends every month.
yeah,
That's a dividend stock.
right. And how much do one stock cost?
According to Google, 58.90 US dollars.
Then I assume it's pretty easy to get passive income like that. Because it doesn't even depend on how much they are paying in dividend. Like if they are paying every month, I assume it's a pretty low sum. But yeah, it's a beginning to get some sort of passive income.
I mean, sure, of course. And if you have enough money, okay, so they are paying the last, oh no, the coming pay, the next dividend payout will be the 31st of January 2024.
Right,
Um, and then they will pay 0.2565 US dollars.
right.
So if you buy 4 shares, owe you will own.
They will owe you or they will pay you.
They will pay you $1 a month.
Yeah.
Uh, so yeah, do the math and then yeah, I mean you have to invest some thousands and millions to to live comfortably on their dividends, but
No, yeah,
yes,
yeah, yeah. But like, I mean, like, yeah, yeah, yeah. That's interesting though. That's interesting though. Because I don't know, €50, some other company. I don't know. I don't know. I'm just thinking loud.
yeah,
But yeah,
yeah,
that's interesting.
yeah, absolutely.
Did you wanna like add something more?
I don't have anything more to add. Let's go to the next one.
Yeah.
And yeah, dividend and income stocks, that was my second favorite, so to say, because I
Uh,
had prepared and now I have dividend and income. Yeah,
Understood.
yeah.
All
Okay.
right. So yeah, next one is safe stocks, right?
Yeah.
Yeah. You can go ahead and say the definition.
Yeah, I'll try to keep it short and concise just so we don't.
Yeah, I feel like we have actually drawn out our conversation a
Yeah.
bit,
Yeah.
as it
Thank you.
always happens. So
Yeah, that's typically us. But yeah. Okay, no, but the safe stock uh, yeah, belongs to usually a more stable company, uh, more established ones, and yeah, that have a history of like good performance. Uh,
I have a question though. We both look like we have like 8 lemons.
yeah, no, yeah, go ahead.
No, I had a question like what's the difference between a safe stock and a blue chip stock? Because like to me they are kind of the same. Like it's a safe investment, right? It's a safe stock.
Yeah. According to our list or our descriptions that we have, they are kind of very, very similar. Yeah.
So yeah, interesting. Okay, yeah,
Because we had like now we were on the point about explaining safe and versus speculative stocks. And the safe stocks basically belong to a company that is very established, has a good history, and pays out dividend, or maybe doesn't pay out dividend, but performs good
yeah,
and stable. Meanwhile,
exactly.
speculative stocks are more riskier. Even though, in my opinion, there are a lot of, I mean, I think all stocks bear some kind of risks, right? But yeah, uh, some are more riskier than others. And in this case, the riskier one would be the speculative stocks.
Yeah, yeah, yeah.
Um,
Which is the next category.
yeah.
Good
And the
segue.
spec yeah, and the speculative stocks are also more volatile, to mention
Yeah,
that.
yeah.
Yeah.
Exactly.
And then we have blue chip and penny stocks. We already made this sort of connection between blue chips and safe stocks. They are kind of similar.
Yeah.
Uh, Meanwhile, a penny stocks would be, yeah, as you hear from the name, a penny stock. Then that's a stock that is traded for below $1. In some cases, I've heard that a penny stock is also uh, considered a stock that is trading for below $5. So I think it depends. Uh,
Right.
but yeah, I would say this is also one of my favorites. And that's because, yeah, I have already told you about the story with the teacher I had, and he said he only invests in penny stocks. That's because that's where you can make money, and it makes sense, right? So if you, for example, invest, let's say $10,000 or euros or wherever you want to be in this world, uh, whatever currency, and the stock price doubles, then your money will double as well, right?
Yeah, yeah.
So,
Yeah, it's interesting. Like, yeah. Mm,
and he explained it like, okay, guys, he was like, okay, so you invest, let's say you put 10,000 in Amazon, right? How much will Amazon sort of grow? Okay,
yeah.
it may grow a few percent, right? But it's kind of stable. Meanwhile, a penny stock, if you choose the right one or choose, if you do your homework and you know invest in the correct company, you may get a very good uh, reward.
Yield return, right?
Yeah, yield return. Yeah, uh,
Right, right. And no, that makes sense. Yeah. And also, I was just making that like the connection, like like blue chip stocks and like safe stocks. They are, I think, mostly of them are large cap stocks as well.
wait, which one?
Like the blue chip and the safe stocks,
Yeah, I would say so too. Yeah,
because like they are the established ones, and as you just mentioned with the Amazon, I think yeah, yeah, it makes sense. Like it won't like do any drastic growth spurts anytime soon, right?
yeah, I don't know. I mean,
Spurts. I think you can say that. Yeah, whatever.
yeah, not what I would say, not what I think. But they're quite stable. Yeah, we had Amazon, Apple, Coca-Cola, and those bigger companies.
Yeah,
Yeah,
growth periods, maybe. Whatever. Yeah. Well, yeah, exactly. So from the penny stocks, which kind of is a good introduction to IPO stocks because the penny stocks have just gone through the IPO process. And I assume IPO stocks, which are the stocks that are really new, like, yeah, newly introduced into the stock market, that they pretty soon become penny stocks. Or maybe it also really majorly depends on how the company that goes public is like valued, or what was the word? Evaluated? I don't know. Because it was like as we talked about last episode, it is like the investment banks ish that have the IPO process. They kind of determine what their stock could be worth, right?
yeah. I was just about to mention that. As you said, not every not every company that is going public will be a penny stock, right? Because it
Yeah,
depends on, as you said, it depends on how it is evaluated.
yeah,
So, for example, some stocks could start trading from, let's say, $30. Meanwhile, other maybe smaller companies could trade for from like a few cents. So yeah,
exactly. And then like, yeah, it makes sense because we have major companies. We even isn't like even Rolex private?
Yeah, Rolex. Yeah,
It's
Rolex is.
like disguised as a charity, right?
Yeah, that's why it's not public.
Exactly. So like if Rolex would go public, I don't think it ever would be a penny uh
Yeah,
have penny stocks, so to say.
yeah, yeah. I agree with you on that one. Yeah, I don't think so either.
Yeah. And
Because
like
that
yeah,
again, as Louis Vuitton by Tennessee, they're a sort of luxury brand, right?
yeah,
So they wouldn't trade for like a few pennies,
exactly, yeah.
if which we don't think will happen. But yeah, I don't think Rolex will go public. Uh,
Can you invest in Hermes? I don't know. Because I think it's a private it's like privately owned company as well. It's a family company sort of thing.
yeah, I think you can invest, but that's a luxury one. Um, and it is trading. The last one was for 1,800 euros approximately,
Ah, so you can
1,846.
invest in it. Okay, okay. I was thinking if they like weren't at all on the stock market.
Yeah, they
Like
latest their
yeah,
latest dividend was 950,
950
950 euros. Their dividend.
per stock, 950.
Yeah, 950 per stock. Yeah,
Yeah, I guess it's yeah.
and they have a PE ratio of 48.67. Yeah,
That's what's up.
that's what's up. That's what's up. Yeah. Okay.
Yeah.
And you liked IPO stocks for, right?
Yeah, actually, yeah. IPO stocks was one of my choices because I was really proud of us talking about the IPO process last episode. Because now, yeah, that really made things more solid for me in a way, like made the whole yeah, stock thingy less abstract, which it still is in a few ways, but it's a lot less abstract. So yeah, IPO. I like IPO. No,
Yeah.
no, but
And I think it's also interesting to invest in a company that has just gone public. That is because the price may fluctuate more than usual in the first months, right? Maybe years.
yeah,
So I think that yeah, it could be interesting. It could be like a sort of gamble.
exactly. And then it really speaks to it's kind of my definition or my biggest reason why I love, you know, talk about like business capitalism and all that stuff. It's just because of these small companies. Like, yeah, that's it's for me, it's that kind of a symbolism of freedom in a way where things aren't as centralized. Like, yeah, now I go a bit philosophical, but philosophical. Yeah, but yeah. I like it. I will check out more penny stocks and IPO stocks. That's my plan when I finally start get grow some balls and start investing. So
Yeah. I mean, yeah. I mean,
and yeah, you mean
yeah. Everyone. I think that everyone should start investing, especially like penny stocks is like that would be like yeah. You can invest, for example, €3, $3 or whatever. It doesn't have to be a big sum of money.
right,
But
right.
I mean, you could just try out different strategies and different stocks and just see how everything works.
Yeah. And that kind of gets me hyped up because you can just get some practice in about like personally evaluating a company,
Yeah,
just like Warren Buffett has done a million times,
absolutely. Yeah.
and also Charlie Munger, of course. Um, yeah, yeah, yeah. Another thing I want to mention about IPO stocks though,
Yeah.
and which grabbed my interest because when I was Googling for IPO stocks, the search suggestions was like throwing up IPO listing time, and then it kind of clicked for me. Oh, damn, that's really interesting. When do they really like pop up on the stock market? So I think as most people know, like the stock market has its opening times, right? When it opens and closes. And so I think most stock markets like open sometime in the morning, like during the morning hours. Like now in my notes, I have 9 a.m. I'm not sure where that is, but yeah, that is basically the time. Wait, I will just read the paragraph. So the IPO listing takes place at 9 a.m. on the listing day with a listing ceremony. The exchanges conduct a special 1 hour trading session called the pre-open session between 9 a.m. and 10 a.m. for newly listed IPO shares. The regular trading in IPO shares starts at 10 a.m. Interesting. So I wonder what the special 1 hour trading session is, between 9 a.m. and 10 a.m. I wonder what that is.
Yeah.
Do you have like some special some sort of privileges if you are like among the first one of the first people who like buys the stock, like trades this, or like yeah.
I don't think you should have, to be
Well,
honest.
I think it's called special for a reason, so maybe it has some perks.
You called it
Uh,
special open hour?
yeah, so the exchanges conduct a special 1 hour trading session called the pre-open session between 9 a.m. and 10 a.m. for newly listed IPO shares.
Oh yeah, that would be for newly, oh yeah. Oh, for newly traded IPO shares. Yeah.
Yeah, yeah,
I
yeah.
mean, to be honest, I think that could be. Um, I know, for example, if you owe stocks in a company and they choose to have, wow, I don't know what they are called. I don't know what these are called in English. But I mean, I know that if you are a stock owner in a company, you may have certain benefits when it comes to them choosing to sell even more stocks. So they may, for example, push out even more stocks out on the market just to gather or to get more capital, right? And that's when you, as a stock owner, may get a sort of discount.
Right, right, right.
And I think that could be something similar.
Okay. Okay. Nice. Nice, 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 nice. That sounds good. That sounds good. Yeah, it will be fun to look into that more actually. All right. So then we have ESG stocks, right?
Yeah.
Or did you want to like
No, 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 no. I don't have
add
anything else
something
to.
up? All right. So ESG stocks are just the stocks that are like more like environmentally focused. It's like shit. it's like more ethical stocks, right? Like they sort of have more uh ethical values in focus, right?
Yeah. Yeah. So I would say that ESG stocks would be stocks in companies that focus on or that have a good ESG score.
Wait, is that the score that like pushes like diversity and all that all that stuff? Or
I think I'm mixing it up. I think, but I mean, it is sort of ESG stands for environmental, social, and governance, and refers to key types of risk public companies may face. Yeah.
but like yeah, is that abbreviation the same as the one like those points, that companies
I mean, ESG, yeah, ESG stands for ESG score, and ESG stocks are kind of like ESG stands for the same thing.
so I wonder if Larry Fink was the innovator of the the ESG stocks. But yeah, okay, interesting.
Yeah, but no, that would be. I don't think I should have mentioned ESG score because I'm not sure whether these stocks have an as a score specifically. But simply put, ESG stocks would be stocks that are or that belong to companies that have a good ESG focus.
Okay.
So that, as you said, that are ethically doing the right, yeah, that are ethic.
Right. Right, right, right. Right, right. I turned off the gain on my mic because my dad is like screaming in the kitchen. So.
Okay, yeah,
Okay, okay. Last one. Last
that's
one,
one.
guys. So specific industry stocks. I have
Yeah,
actually no notes on that. I will check it. I will check that out.
I mean, I don't even think there is such a complicated thing. Uh,
No, then you can go ahead and
Specific industry stocks, I would say that that would be stocks within a specific industry. So that would be like a sub industry.
Oh, okay, okay.
No. So for example, if you look at yeah. So let's look at the industrial sector. You can have like different types of
Manufacturing.
subcategories, yeah, subcategories in the
Right.
industrial one, such as, for example, nuclear. That would be a that would be a specific industry stock. So if you, for example, own stocks in a nuclear in a company administering nuclear plants or something, that would be uh,
Yeah.
that would be specific industry stocks. I think that could also be yeah, nuclear could also be related to energy, right? To the energy sector.
Yeah.
So it depends, yeah.
Okay, okay. So it's like basically the subcategories of the sector stocks, right?
Yeah,
Which we kind of mentioned earlier.
yeah. We also have one within the energy industry. There are oil companies and clean energy companies and so on.
Right.
So yeah, and then in the IT you have, for example, artificial intelligence and so on. So
Oh,
yeah,
okay. So
I would put nuclear in the energy as well.
yeah, yeah, yeah. All
So
right, beast,
okay, yeah.
beast.
So that would be it.
Those are the categories which we had, which we found. Yeah, we are. There are probably more. I don't know. But one quick question.
Yeah,
Now we have talked about all these different types of stocks, right?
yeah.
And when we did the episode of Berkshire Hathaway, you mentioned A stocks and like, was it like A stocks or was it like B? I don't know. There were like those kind of categorizations. Like, how do they fit into all of this? Do you like have some sort of a picture?
I would say that it feels like we have only touched sort of. So I think you can categorize stocks even more than this, because if you look at, for example, large cap, mid cap, small cap stocks, right?
Yeah.
So a company operating or yeah, having a market capitalization less than 250 million would be categorized as a micro cap stock. Even a micro cap stock could have, I think, an A or B or C stock. I don't think that's really common because yeah, it's such a small market cap. Um, but we have just looked at different. How should I even say this? How should I try to? I don't know how to explain it properly. Um, and try to make it clear and concise.
You mean like there are like even more, you can like even like kind of categorize stocks more,
Even more, yeah, even further. Yeah,
even like yeah, with the more nuance.
yeah. Because now we have only touched yeah, domestic and international stuff. That would be, you could have
Damn,
if you
you
are
froze again. Wake up.
yeah,
You froze again. No.
it's my internet
Or
that is
maybe
kind
it's
of
mine. I
unstable.
don't know.
No, it's mine. It's mine. I got a message.
Oh shit.
Um, but yeah. So, for example, in domestic and international stocks, so if you're based in the US and are looking at Coca-Cola, that would be a domestic stock, right?
Yeah.
But this could be type A, type B, or type C, or just type A and type B. And so, if you are based in Europe and buy a stock in the US, do you? I don't think you follow, do you? It's
No.
kind of no, it's kind of messy. Okay, so let's say there is a company in Sweden
Yeah.
that is offering A stocks, B stocks, and C stocks, or just A stocks and B stocks.
Okay.
Okay. Okay. If you're that could be categorized both as a domestic and international stock, and that could also be categorized both as a growth stock and value stock, and as an ESG stock, and as sector stock,
Okay. Okay.
and dividend and income stock. Do you follow? So it's like so if we are looking at stocks, we have mentioned the categories up here, but there are even subcategories.
Yeah. 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 I think I follow, but you are still frozen on my screen though. I can hear you, but
That's crazy because I see myself moving around here. Uh,
I don't see you moving at all.
yeah,
Damn it. Well, whatever, whatever, whatever. It's a podcast, so.
yeah,
But okay, so you mean like the so you can categorize the stocks in ABC,
yeah.
and the company does that.
Yep. I think they can decide whether, yeah.
Okay, okay, and then they can uh give those stocks different characteristics, right? Like which ones pay dividend or which don't, and like
Yeah, I
was
mean,
it like
usually A stocks have more voting power.
okay,
Uh, and for B stocks, I don't know. I think it depends. I think it depends.
all right,
But as I know it, A stocks do usually have more voting power.
all right. But like basically, ABC stocks have different characteristics,
Yeah.
right? Okay, cool, cool, cool. That's really good to know because the oh now you're back. Now you're back. But yeah, because these types of stocks that we were just discussing, um, or going over, those are the categorization. There are pretty much external, right? Like the company doesn't really decide in a way in which categories it will be in, sort of, right? Like I'm sure they like know all this stuff, so that they will know in which categories they will be in, but like, do you get what I'm saying? I think we like touched upon this prior as well, that like it's kind of ex
I mean, about the sex, yeah. Okay, let's put it this way. We have just gone through different categories of stocks.
yeah,
Then I would say that there are different types, which is kind of similar, but I would put it as category. You can categorize it as a domestic or international stock.
yeah.
And then you have different types of stocks that could be, yeah, or different classes. Sorry, different classes of stocks, right? That could be, I found a really interesting text here. Class A shares generally have more voting power
Right.
and a higher priority to dividends,
Mm-hmm.
while Class B shares are common shares with no preferential treatment. So then
Yes.
you just own the share without necessarily be given any dividend payout. Just, you know. And then Class C shares can refer to shares given to employees.
Right.
Uh, yeah, with varying restrictions and voting rights.
Oh, I don't like that, but yeah. Okay.
It depends what you buy.
No, no, but like with the employee stuff, like damn, uh, I would not like if I have important employees that I want to like reward with some stocks, I would like provide them with a stock, like no questions asked, because they have helped the company grow. But like yeah, it kind of speaks to how some companies treat their employees, I guess.
I mean, the thing is that that's not for all of the C classed shares. Some C class shares could also be publicly traded, just as B shares. But eventually, it comes down to like some few minor differences. For example, the price.
Okay, but like aren't A shares traded as well?
Yeah, they are.
All
But
right.
I was thinking about the C shares. They don't always have to be given to employees, but they can also be publicly traded.
Yeah. No, no, no. Like I get that, but like yeah. I was just focused on the statement that employees usually get C shares.
Yeah.
If I heard it right.
I mean, it's not even very, I wouldn't say it's very, very usual that employees even get any stocks
Yeah.
in the company. I mean, it happens, but I don't think that is so common.
Yeah. All right, all right. No, like yeah, I'm just gonna to me uh I've heard it like n now and then, but like it's because we have like now talked about Ray Kroc, right? Because the lady that worked for him uh many years, she missed her kids' birthdays and stuff. She was giving like some stock, and yeah, that made her, of course, wealthy and stuff. But yeah. So to me, I probably have the wrong perception because I'm like we have yeah like talked about companies and founders and stuff, and during these stories you can like sometimes these sort of things pop up, but I guess it's not as irrelevant, like, yeah, overall.
Yeah.
So yeah.
Yeah.
All right.
But yeah,
You have some more thoughts?
I don't have any more thoughts.
Um, I don't have any either. I'm hungry.
Yeah. Yes. All right, everyone. So many thanks for listening to today's episode about stocks and different stock categories. We really hope you enjoyed it. And yeah, hopefully got something out of it that will help you navigate life's spin.
For sure, yeah. And comment down below which categories we maybe missed in this episode. And yeah, maybe you have some other investing topics you want us to cover. So comment down below, like the video, and follow us, subscribe. Yeah, so we can grow together. Until next time.
Adios.